I like to look at too, whether it's small business owners or in the case of even W-2 employees, if we're already making quarterly payments, maybe that's just easier for us. That's how our operating system works, our household finances, where we're at least paying it. We have those vouchers, they're due every couple months, and we're paying them based off of what we made last year. Keep in
Mm-hmm.
mind, it's based off of what you made last year. It's satisfying that requirement.
Mm-hmm.
But if you're now in a situation, and we hope you all are, where your income has grown, your business has done well, maybe you got a promotion, you're still going to owe taxes at the end of this upcoming tax year because, well, you made money. You made more money. And your quarterly tax payments that you paid in were based off of last year. So one of those good things
Mm-hmm.
to also just keep in the back of your mind here is if you're making more money in this current year, you may want to go, whether you're meeting with your accountant, you're looking at what you're paying in and saying, am I paying enough? I know I'm not going to have penalties, but if I'm making more than I did last year, maybe I should be adjusting this so I don't still have a big oops or surprise later on in the year. No penalties, but still surprise.
That's an amazing point. Because to your point, we're talking about putting enough aside to not pay
Doesn't
penalties
mean
and
you don't owe.
interest. We're not talking about paying the full
Right.
bill. So if you do flip, for instance, to RSUs paying 37%, you're probably getting closer to paying
Yeah.
the full bill. You're probably not an effective tax
Right.
rate of 37 because tax rates are progressive. They start at 10, 12, and then go 22, 24, and all the way up. And you pay all these along the way. So even when you cap out at 37, your effective rate doesn't ever get fully to
Right.
37. It can't because you paid all these lower rates along the way. So, but to your point, and the other thing I finally did just remember the third thing, you can change your W-4 form to withhold more cash from your own paycheck
Mm.
every year or every, paycheck. So if you don't want to necessarily do that out of RSU income. A lot of this has to do with cash flow planning as well as
Mhm.
tax planning. It's where am I going to get my cash flow sources to live life? And how do we make sure money works really well for us, nice and smooth?